Good morning, everybody. Happy Thursday. It's April 23rd, 2026. Straight up 8:50 in the morning Eastern time. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. Talk a little bit about what the markets did the last couple of days, what it's about ready to do today, and what we're looking forward to the next 3 to 4 days. So, obviously, futures are down a little bit this morning. S&P futures down about 20 handles. They were down a lot more earlier this morning. They rallied back to about the flat line about half an hour ago, 40 minutes ago, and have sold off again in a really volatile session. And volatility is starting to pick up again. And why is that? It's because still there's a lot of uncertainty with how this Iran war is going to get resolved. And with the rise in uncertainty, also, there's a lot of doubt and worry that, hey, what happens if the markets get slammed for whatever reason? I mean, the markets could get hammered if the Iranians do something, out of the ordinary. If the United States starts attacking and the ceasefire ends up ending without a resolution. So I think there's a lot of hope and a lot of expectations that things are going to fall in line, which is why the market has rallied sharply over the past 3 weeks. But that can all be given back very, very quickly and very, very easily. Remember something, markets go down faster than they go up. Let me repeat that again. Markets go down faster than they go up. So if it took 3 weeks for the markets to go up, it could take 4 days for the markets to come all the way back down. Now, I'm not saying it's going to happen, but I do think that you have to show some worry and some concern at all times, right? Having some protection on it. Yesterday in the chat room, I know the markets were just floating around to the upside and not making a whole lot of progress up as well towards the end of the day, last couple of hours of the day. So I bought some puts. Of course, the markets closed higher on the end of the day, and now I'm happy that I have some puts on with the markets retreating over here, and there's not much of a bid in the markets yet today. So, it could certainly change later on in the day, but I'm happy to have some puts on, some SPY puts on. The QQQ puts are good. The DIA puts, obviously, the Dow Industrials are gonna get hit hard today because IBM is down sharply. So you've got to have some protection on, right? I preach it all the time. I tell everybody who will listen about, hey, how do I manage risk in my portfolio? I get questions like this all the time. And I have to say, the best way to do it is to have some puts on, even though they may not pay for you right away, or even 4 times out of 5, you might not make a payoff on those things. But that 1 time out of 5 is going to make up for all those losses from the previous 4. So you've got to have some protection on, and whether you're a trader or whether you're an investor, right? Now, an investor, obviously, along with a long-term time horizon, is looking at dips to take advantage of. I don't think very many long-term investors are seeing markets at all-time highs, some stocks that are making all-time highs and saying, gee, that's a bargain. Let me go ahead and start buying something. No, they're not doing that. No, they're probably doing some selling, trimming some things off, and buying some protection to the downside, and maybe selling calls against their stocks. I don't know, whatever. But that's what I would be doing with my long-term portfolios, and I've actually been doing that with some of my clients and some of my own accounts as well. So that being said, again, volatility is starting to pop up. I've talked about this in the market blast for the past week and a half. 18 level on the VIX is pretty stubborn. Let's take a look at that. Pretty stubborn, meaning the volatility sellers are just not willing to make that commitment to get below the 18 level here for any stretch period of time, right? So, and you can see here's the 18 level right there, and we had one close below there last week, and then we popped up there. We're trying to get below it, and you can see the importance of the 18 level going back several months, right? And you can see this was a breakout level to the upside. This is where we caught some support in the VIX in late February before we launched higher in early March. This was right before or right around when the Iran war started. You can see a lot of congestion over here. We see a lot of large price bars in January and early February, and even going back to late last year, a lot of congestion in this 18 area as well too. So you can see how important this 18 level is. If we do break below that significantly, it means a risk on mode is in place, and we could see markets really take off to the upside. Now, I've heard some predictions from our good friend Tom Lee from Fundstrat, talking about how he believes that 7,300 on the S&P 500 is still a good target to hit, but then he believes that we'll probably make a run down, perhaps 15-20% after a period of time. Who knows? Maybe, I don't know what this time frame is. It's in the summertime, this in the fall. Who knows? But that would be a pretty rough move down for the markets if he's correct, right? And then that, let's say we're at 7,300, 20% of that is about 1,500 points roughly. So that would take it down to about 5,800 on the S&P 500. Not horrible, but certainly not anything that anybody is going to be excited about, right? Unless you're sitting in a lot of cash and just waiting for that moment to happen, and then you're able to get in there and scoop in and buy some stocks that get tossed out. So currently, right now, a lot of volatility, but we do have some positives with the markets as well too. Again, S&P 500 at new all-time highs. Also, the Nasdaq at all-time highs. The S&P 500, the SPY. And you can see that there just ticked in and closed at a all-time high, 711.21. And the QQQ also had a huge breakout yesterday. Really strong move on moderate volume. So nothing to really break out volume yet. And that's not what you normally see, right? Let's understand something about the volume and the turnover, right? You don't normally want to see really high volume when the markets are making new all-time highs. Now that flies in the face of what a lot of people tell you. I'm not sure if the textbooks say that or not, but I will tell you, in my experience, that if you want, my thing is, let's keep the rally going. What is needed to keep a rally going, not to kill the rally? Now, if you want to kill a rally, you get a lot of people piling in right at the top. If this is the top in the Nasdaq right here, right, in the QQQ, you get a lot of volume, a lot of people piling in, coming off the sidelines, climbing that wall of worry, and getting in, say, I got to get in. This market just keeps going up. I'm just getting so annoyed. I'm sitting on the sidelines. I can't stand it anymore. Get me in. That's when you get a top. All right. Now, obviously, markets go up and they go down. And when they're going up, they make several tops, right? There's several tops that are made. It's just the last one that matters the most, right? So you can see here was the top here. We went right through it. Here was the top here. Went right through it. Here was the top here. Went down, et cetera, et cetera. So what I like to see is moderate volume, medium to moderate volume, not a little bit below average volume as the market continues to rise. That means that's going to give you proof that first, big money is still supporting stock prices as they're going up, and B, the average investor who's on the sideline is still not in there and participating, right? And that could be read a couple of different ways, but for me, it means that the wall of worry is up, and as long as that wall of worry is up, markets can continue to move in that particular trend. And if the trend is up, it's higher, right? Because a lot of people will look at this chart right here and say, oh, overbought. Look at that relative strength. It's above 74%. How can I buy this here? Well, you don't have to buy it here. What you could do is you could wait and buy the dips, right? And what we've noticed here, certainly the last 3 weeks, right, in this particular run, the dips have been short, sweet, and shallow. 3 S's: short, sweet, and shallow. What does that mean? They haven't been giving you very much time to get in. They've been nice opportunities to get in and buy the dip. And then 3, they don't go down very far or for too long, right? We haven't really had very much opportunities. And one thing I learned many years ago is that the best trends do not give you a good opportunity to get in, right? Let me say that again. The best trends do not give you an opportunity to get in. So if you're waiting around for that opportunity to come in and say to yourself, okay, well, I see that the QQQ has gone up to 655. I will wait till it comes down to 640, and then that's going to be my buy point. Well, you could be waiting for a very long time for that, or it could happen in a couple of days. But if it does happen in a couple of days, let's say it drops to 640, maybe right over here, it may not be done dropping, right? It may be a very swift move down, and you get yourself caught in a price level that you think is going to work for you. You've got to use the charts to find targets. Don't just pick something out of thin air. So, like for instance, I would look at, say, the 635 level, right, which we peaked and fell back. We peaked and fell back in October and also in late February. That would be an area that I would say, you know, we might find some good support over there, right? So if I was on the sidelines and I'm waiting for an opportunity to get in, I'm not saying, okay, I got to get in now, but I'm going to wait for this level to be tested. That's just one example. Okay. Use the charts in your favor to determine where you're going to get in, where you're going to get out, and determine if that trend is still in place. Okay. All right. That's a lesson for the day. Jobless claims came in just slightly higher than expected. Again, we're going to get some wild movements here in the next couple of days. Next week is going to be a huge week with big earnings from some of the Mag 7 names. I think 5 of them come out with earnings next week. We had Tesla last night, which came out with good earnings, but they did say that they're going to be spending a lot of money on AI. They increased their CapEx budget from 20 billion to 25 billion, and I don't think the market liked that. So you can see Tesla's down $10, $11. I think it could recover today. Probably not get back over 400 where it was right after reporting their earnings last night, but still we'll see what happens. IBM is getting drilled. I don't know why. I don't quite understand the huge punishment for IBM over here. But listen, I'm not here to argue with markets. I see GEV, which is a name that we got into last week, earlier this week, is up nicely here today. ServiceNow is getting punked after warning about their quarter going in. This company is just a disaster. Later on today, we're going to have earnings from Intel. I had somebody ask me about Intel today. I think it's had a remarkable run over here. If you've missed it, too bad. I've missed it too, so I don't feel bad about it. But I think it'd be very difficult to get in here at this time on this stock right now. Really do. Do what you want to do, right? But as you can see here from this chart, the stock is clearly grasping for straws right now, trying to hold on, right? And if you remember last time they reported earnings, they went up to a high here, new all-time high, and they just got punked in January, came back down and actually broke that 100-day moving, 50-day, and then the 100-day moving average, and went right back up again. So look, the stock's been on a great run. You're going to see a lot of people who bought it in the 40s up to the 60s, up almost 50% in about 3 weeks. Just an astounding run for the stock, but probably not a good spot to get into today. Newmont Mining is going to be also reporting. This is a gold miner. It's pulled back a little bit. It's one of the biggest and best gold miners out there. Take a look at this one. AEM is the other good one that I like. They're not reporting today. We do have some smaller banks like Byline and Associated, Glacier Bank, Customers Bank, Eastern Bank is going to be reporting tomorrow morning. We have Charter, Procter & Gamble, SLB, HCA, Hospital Corporation of America, and a few other smaller names as well too. We did hear from Blackstone this morning, and they looks like, I think they came out with good numbers here. Let's see what they look like today. Down slightly over here, but I know they came out with good strong numbers last night. We heard from CSX, and they are up this morning nicely, a couple of dollars, about 5% this morning. Good numbers from them. Texan also came out with good numbers, and they're up sharply today, up about 10%. Lam Research also came out with good numbers. They were up a lot right after reporting, but they're only up $1 or $2 right now. So this might be one to take a look at as it retreated back. They came up with good, strong numbers. Targets are up there as well too. So maybe take a look at some May or June 270 calls on Lam Research. That's what I'm looking at. So that's going to be it, everyone. Have a wonderful day. Great trade well today. And I played Seals and Croft because I forgot to play it last week. We did lose a member of the team. Dash Croft passed away a couple weeks ago. Rest in peace, Dash. Jim Seals passed away about 4 years ago, in 2022. So all we have left is the legacy of their wonderful music, the wonderful tunes that they put out back in the 70s and 80s. And take a look, take a listen to the rest of the song. And I will see you guys all back on Monday. Enjoy the weekend. And it's starting to get warm out here. As you can see, the sun is shining to my right. And enjoy the day, and trade well tomorrow, trade well today, and pay attention to what's going on. Keep some protection on, yada, yada, yada. All right. Take care. Bye.